Okay, so looking at vol, so realized volatility holding up last week. Bitcoin started to charge again, obviously on Friday, doing it on pretty violent realized. And so you can see the 10-day realized here, not really pulling back. Had we not had that weekend move, you would have seen it roll over, but it's managed to kind of hang in there at around 50. Implied volatility 10 days ago, obviously, was where we saw its highs, spiked up to around 80 on Bitcoin, has been consolidating, kind of finding itself at around 60 now. So the spread between Bitcoin implied and realized is down to around 5 vols now. So you can see here this red bar not quite as high as it has been. And so similar story on Ethereum, quite tight there. If you look at 10-day realized and 1 week, 1 month vol, they're all kind of in the same vicinity there. It's a pretty small amount of positive carry. It is still positive, but it's pretty small. You would really need realized to come down quite considerably, which it may well do if markets can stabilize. But right now, the evidence really isn't there to be an aggressive seller of Gamma right now, I would say. You need to be fairly brave to be smashing out a load of Gamma right now, given that Bitcoin is having its move and has potentially still got quite a lot of room to that 25.5 area, which we think is the ultimate sort of target that it's heading towards, right? Now, we do have a big expiry this Friday, $1.3 billion expiring notional-wise in Bitcoin, which is about 22% of open interest, 800 million expiring in Ethereum, which is around 16% of open interest. And BTC Gamma positioning does look to be short here. There's been a fair amount of call buying in the front end that's taken dealers short. And so that's why I would expect realized to kind of stay quite high. So I wouldn't be in a rush to sell Gamma here, knowing that the street's probably quite short, right? So that's part of that logic as well. Okay, then if we look at term structure, see what that's been up to. Where are we? There we go. So BTC term structure staying inverted. So managing to hang in there. Usually it's quite short-lived, the term structure inversion. But if realized can manage to stay up there, so can the front. So you can see that curve staying quite inverted. And if anything, the back end Vegas drifting very slightly and finding some sellers, whereas no one really comfortable selling front end Gamma just yet. Looking at Ethereum, it's kind of more of a parallel shift lower in the curve over the course of the week. And Ethereum realized hasn't been quite as exciting. So that kind of explains why that front end is dipping a little bit and not quite keeping the same level of inversion as Bitcoin is. Looking at the spread between ETH and Bitcoin vol, the front has absolutely collapsed down to about 3 vol points for the weeklies, which is pretty unusual for it to be that cheap. You can see that here as well on the weeklies, this green line going there down towards 0. The back end of the curve holding up a bit better, somewhere between 7 and 8 vols. We do think longer term, owning that 6-month part of the curve in Ethereum relative to Bitcoin is a smart trade. But given the realized right now, it's not carrying particularly well, having that spread on. So we'd probably wait for Bitcoin to reach its target and then look to enter that spread trade, thinking that Ethereum then can have its charge a bit later, maybe closer to that catalyst that we talked about in March, where you might then get some Gamma outperformance out of Ethereum. So I'm still looking at that trade. Haven't really done anything yet because the realized doesn't line up. It's not really suggesting it's a good trade to be doing from a carry perspective just yet, but it's certainly a trade that I'll keep my eye on. Okay, and then lastly, we've got curves trying to steepen back into contango at the end of last week as the market did find that 21K area on Bitcoin, found some stability there. But then obviously as realized picked up on the break higher, we then flip back into inversion again, right? So that seems to be, if spot breaks back down to, back towards that 21K area, I wouldn't really expect the curve to hold an inversion, because now it seems that the curve's only going to invert if we keep breaking to the upside, right? That dynamic's in place now where people are going to rush for Gamma on the way up, and on the way back down, maybe they're going to be less in a rush to own Gamma. So the front might not be as well supported. So that's a dynamic that's quite different to what we had seen last year. That's now kicked in. And that also explains what Skew is doing, right? Skew's flipped towards calls because people are now considering that the direction of the market that's going to drive more volatility is the upside rather than the downside. Okay. Normally we saw, macro driven sell-offs plus all the scandals last year, all the realized vol was coming when markets went down. Right. But once we washed everyone out and all the bad news was in and all the liquidations were done, then there wasn't really any more realized even on bad news flow or anything like that. So now you're actually getting the opposite, where if spot wants to rally, then there's more volatility there because kind of people haven't really got it right, basically. So people aren't as long as they want to be, and it's forcing people to rush back in because they think the Fed is potentially loosening up a bit in terms, and net liquidity is also ticked up as well. So those are sort of factors that are driving it and driving some of that optimism in the short term. Okay. Skew has been pretty choppy though. Like I say, it is for the calls now. In the front end on Bitcoin, it's around 4 or 5 vols for calls. It's more like 2 vols in the back end, still for calls though. And that's because there's been a bunch of outright call buying in Bitcoin, which has driven that skew. If you look at Ethereum, the skew's not kind of flipped quite as dramatically. It is marginally for calls, but only slightly. We're talking like a vol point here or there. So Ethereum, not really quite as convinced as the bull scenario as Bitcoin right now in terms of what Skew's telling you. That longer dated skew in Bitcoin flipping for calls, we do think, you know, it does seem that as though option traders are looking a little bit past the kind of the liquidity cycle and the recession and all that stuff, and basically thinking that Bitcoin's bottomed now. I'm not as convinced personally. Like I say, I still think later on in the year, if we get one last downdraft in risk assets because the Fed pretty much says, yeah, you've been a bit premature on pricing a pivot here. We're not budging. That would be quite an interesting wake up scenario, which is why I think medium term risk reversals, kind of June and out, are actually a really, really nice way to hedge out any long crypto holdings that you've got, right? So I think once you get to 25K, it depends on when it happens, right? If you get to 25K next week and the liquidity cycle is still turning up and we don't see an amazing reason to be super, super bearish, then maybe you don't need to pile into those risk reversals, right? But if we're heading into the March FOMC and we've popped up to 25K and, you know, the skew is still for the calls, it's a really nice time to be putting on those hedges, I believe, to hedge that tail. And we already said Ethereum less convinced on the bullish flip. Longer date maturities still staying pretty close to flat there, basically. Okay. Dashboards, individual, you can look in your own time. Not a whole lot to say. I mean, Strategy Compass is saying buy puts, but that kind of makes sense given how much spots rallied. It would say that. Just an interesting thing to see just how much the curve has shifted from a month ago, right? That yellow super steep contango there in Bitcoin where the front end was at 30, it's basically double what it was a month ago. So it's 60 now, whereas the back is pretty much exactly where it was, right? It just shows you kind of how dramatic the turn has been in terms of the shape of the term structure there. And then Ethereum, not quite as dramatic because that front end didn't get quite as low. But in terms of Strategy Compass, same story. It's telling you to buy puts because obviously we're at the top end of the Bollinger Bands or not far away from there. But right now, I'm not in a massive rush to buy puts for obvious reasons, right? Okay, looking at flows. So the main flows that we're seeing, obviously a load of short-dated call buying came in. So I've highlighted here in this big sort of ellipse. Jan to Feb call buying, 22K to 28K strikes. A big clip went up in the 3rd of February, 28,000s. That was one of the most notable clips that went up. People using low delta, short dated upside to try and get some leverage to the move. And I think they did pretty damn well. I think they made 3 to 5x on their money pretty fast. Good volume week as well on Bitcoin. Obviously, the week before was a huge volume week, but volumes are hanging in there. They're not quite as high as they were the week before, but they're doing quite well, and obviously dominated 75% by flows on the call side. So apart from those upside call buys in the front end, what else did we see? We saw a load of January call and February calls active on the screens as well. So that's the retail guys who can't trade in the block sizes. And then before the move higher, actually on Friday, we did see, because the market was stabilizing, we did see the 21,000 straddles get sold in a reasonable clip. I've highlighted that there on the block sniffer. That ended up being not a good trade because then the market ripped higher, but someone letting some of those straddles go. And then the sold bearish trade that we saw, like, echoing what I'm saying about the June skew, was a risk reversal on the 14K versus 35K risk reversal. Obviously, that's some kind of hedge there, more medium-term hedge. Personally, I like that trade. I just think the entry point here isn't perfect just because from the chart, it does look like a test of 25.5 is the most likely scenario right now. Okay. Ethereum flows, less outright call buying in Ethereum, as we couldn't really get above that 1650 resistance zone. We did see some puts that were bought previous few weeks get sold and rolled up. So the 1250 to 1350 put area, which I've highlighted here in the blue, that basically got sold back out. It's not worth a ton after the market's rallied. It got sold out, and then there was some buying of the February higher strikes in the 1500 area. We did see some cool spreads getting bought as the upside play in Ethereum. So using tight 100-point call spreads to get the upside leverage to February. That's those big purple bars there. And then a lot of activity going on in March and June upside, call spreads, call calendars, things like that. So some June's trading, 1600, 2400 call spreads getting bought, and then the 1600, 2100 call spreads getting sold. So quite a lot of activity on the June 1600s, which are the at the monies. As you can see, that big orange bar there, it's quite a lot of about 30,000 options there, which is a reasonable clip. But just mixed flows really in terms of Ethereum, not quite as clear cut as what we saw in Bitcoin. And then on the 31st of March expiry, generally that tends to be being used as a funding leg in some trades. So people either doing short March, long June type trades, or doing long February calls against short higher up March calls. But for some reason, those March upside seems to be the funding leg of choice in that kind of 2,500 and above area, basically. Okay, so that's the flows. If we then look at our gamma positioning, this is something we definitely want to keep an eye on every week now. It's quite interesting. It will kind of guide us as to what realized might look like. So BTC dealer gamma remaining negative. Once again, after that expiry on Friday, we saw spot break higher. We saw call flows come in, taking dealers quite short. You can see on this bar graph here, all these orange bars are basically dealers short the 22, 23, and 24 thousands on the 27th of Jan, which is this Friday. So a bunch of options that dealers are short are rolling off on Friday. So we'll see if we can get some stability post that expiry, and then the front end vols maybe get sold or come off. Or will it be a question of whoever's bought all that optionality rolls it and wants to buy it in February? You know, it really does depend. If the people who bought those calls just let them die and don't reactivate or replenish them, then dealers are going to be more neutral next week. If the clients come in and roll them or buy more, spend more premium, then we're going to be in a similar state, and we're going to see a negative gamma reading for Bitcoin, which is going to keep things choppy. Ethereum on the other side, though, has been in positive pretty much all week. So that actually has stayed in positive gamma. You can see here the street seems to be long. The front week, the January expiry is here. So a bit of a different setup, really, and it kind of explains why Ethereum just can't get going the same way Bitcoin can, because the dealer positioning looks quite different. Yeah. So just goes to show, gamma positioning is worth paying attention to, because it seems to be having a real impact on the relative performance of the two assets. Okay. So that's positioning. And then what have I been doing? So I haven't done a whole lot. Anyway, that's a quick one in terms of the video this week. But those are the moves I'm making. Those are my thoughts. Catch you guys next week. Thanks.